And so, as mentioned, I'm MJ Green, Chief of Economic Development and Strategy for the Miami DDA. The DDA is a quasi-governmental entity really spurred with economic development in Brickell, downtown, the Arts District, and a little bit of Edgewater. Super happy to be here. The Economic Forum or the Economic Club has been a great partner of ours. If we could maybe briefly talk about the work that you do, maybe introduce yourself again, and then I always think that it's fun, your favorite book for some of the, all of us in the room.
Okay, I'll start. My name is Claudia Battle. I'm founder and CIO for Seaview Investment Managers. What we do is we provide sub-advisory services to institutions. We have several investment strategies, mostly focused in the US and developed markets. I was born and raised in Argentina and moved to Miami 37 years ago, and my family is from Chile.
Awesome. David?
So David Bahnsen of the Bahnsen Group. We're a $5.1 billion private wealth management firm. I work out of New York City. Our main office is in Newport Beach, California. We have 7 offices around the country total. And I particularly focus on US-based dividend growth investing. We manage that money in-house. And
favorite book?
It would be very difficult to narrow it to one. I think that the most influential book probably of my young years would have been Human Action by Ludwig von Mises. And I will not say that my favorite book is my new book coming out Tuesday, Full-Time Work in the Meaning of Life.
Perfect. Luis.
Thank you. So I'm Luis Huitron. I work for Mercantil. Mercantil is a financial services group based out of Panama. We cover Panama and the region. We are historically a Venezuela-founded bank, so we were born in 1925 in Venezuela, being one of the leading lenders in the country, and we want to continue to be there for the next 100 years. We'll talk more about that. I oversee our corporate finance practice, both for the group in terms of inorganic growth. We have been acquiring a couple of competitors in the region, and I also do some investment banking services for clients in Central America. That's what we do. Favorite book, difficult question to narrow it down to one. I will say The Magic Mountain, Thomas Mann.
Nice. Claudia? Yeah, I'm coming back to you. Claudia,
well, I'm going to mention 2, actually.
Perfect.
The 2 that I'm reading right now. One is not finance related, but in the end it is financially related because it affects us all. Is this book by Blue Zones by Dan Bodner. Have you heard about Blue Zones? The places in the world where
Blue
people
zones.
live more than 100 years. So I think that issue has great implications in the financial world and the economy. And also the book that I'm reading now that I like very much is Values, Inc., that emphasizes the importance of values in a corporate culture.
Awesome. And so I actually spent most of my career in wealth management before kind of getting to economic development. I'm so super excited about this conversation. I think my first question is really, what are you guys looking forward to? What asset classes are you most excited about? Ladies first.
Well, we manage wealth for Latin American clients. So throughout the past few years, we reached the conclusion that simplicity is the greatest sophistication at the moment. Because supposedly Leonardo da Vinci said that. People in Latin America, they want to bring their money to the US or the developed markets to escape from instability, insecurity, or whatever reasons they have. So, and they want simple strategies. So we really focus on fixed income, simple bond portfolios, and equities, large cap equities in the US mostly, and some developed markets, and some focus on thematic investments like artificial intelligence and other themes that are going on in the world now.
I understand that. I would say, and push back, I think that nothing is simple right now. I think that we're in such an interesting time that even a simple strategy probably is relatively complex. David, what about you? What are you guys excited about?
Well, I certainly agree that we're in complicated times. I believe that we're more or less always in complicated times when it comes to the global economy. This particular issue coming out of a Fed tightening cycle is its own set of unique and idiosyncratic challenges. And yet, if it weren't those, there would be other unique and idiosyncratic challenges. And why I adopted dividend growth equity investing as my core philosophy 25 years ago is I do believe it's one of the best all-weather strategies available, that it generally will have periods where it is not the hottest dot on the planet, but it very rarely will have periods where it's the worst area, and we like that consistency and stability. It does, unfortunately, for my lifestyle and my wife's peace of mind, it does require active management. I don't believe dividend growth can be done passively.
That's interesting.
And so we have to work very meticulously to try to avoid those future dividend cutters. Requires a lot of bottom-up research. In this particular environment now, I think dividend growth is especially and seasonally attractive. And what do I mean by that? The S&P is trading at 20 times forward. The Magnificent Seven are trading at 40 times forward. A good diversified dividend growth portfolio might be trading at 15 or 16 times. The S&P is yielding 1.5. A good dividend growth portfolio might be yielding 3.5 to 4.5 with 7 to 8% annual dividend growth. Those are the types of characteristics we're going for. We think you have a higher quality portfolio with less volatility, and you don't ultimately give up return over the long term. Now, we're a multi-asset firm. We're invested into private markets. About $1 billion of our over $5 is in alternatives, hedge funds, private equity, private credit. And we do believe that if we wanted to go increase the octane for growth, we'd far rather buy emerging markets than FANG or Magnificent Seven or whatever the new cute Jim Cramer expression of the week is. But I do believe that people have to understand with emerging markets, we have hundreds of millions in the space, but we've always been very low China, and we favor areas with strong domestic demand. We do use an outside manager in this space, but more or less, if you have a big forward-moving dollar, good luck making money for a US-based investor in emerging markets. And inversely, which was the case in the 2000s when the BRIC phenomenon was playing out, if you have a declining dollar, good luck not making money in emerging markets. The dollar is just a huge factor in emerging markets, whereas with dividend growth for US-based investors, you obviously are not fighting a currency headwind or receiving a currency tailwind.
Luis, what asset classes are you guys most interested in? What excites you at the moment?
Thank you. So based out of Panama and mostly in investment banking, we get to work with clients very closely and create investable securities eventually. So I try to cover the region spanning between Mexico in the north and Ecuador, Peru, Bolivia in the south, more or less. That's my area of expertise. And being based out of Panama, we get to see a lot of things going on in Central America. Most of the things that we are seeing in 2024 are in private markets. So a lot of things that we take for granted in more developed markets are yet to be done in Central America. No? It's actually very conservative, as we were saying. So you just see plain vanilla type of securities, and we're working closely together with companies in convertible bonds, other things, or structured transactions that will find a place in the private markets, either with a couple of investors or with a few more, both traded through an stock exchange, which can be the right vehicle for it, or through a private agreement. And we do see that there is an important opportunity over there. Plenty of projects that would not be bankable or that would not be suitable for the public markets are suitable for the private investment markets, and we do see a great opportunity there for people that are discovering Panama, Central America, the north of South America. There's plenty to be done. So private investments.
I think that's really interesting. My maybe favorite question that I'm going to throw out there: soft landing. Did we nail it? Is it going to happen? Do you believe in that, or do you think that we have some a little bit more turbulence coming up? I don't know whoever wants to jump in that first. Did the Fed do it, or did monetary policy do that?
You want to go first, or you want me to go first? Okay. I checked. There is a website by the St. Louis Federal Reserve that calculates or projects the GDP growth, updates it for the current quarter and updates it every week. And I just checked it this morning, and it was the projected for the first quarter 2024 was 4%. So I do believe in soft landing. The economy is really, really strong still. The consumer is still strong. The employment is still strong. I don't know if it was really the work of the central banks. There is a theory, some economists believe that the inflation, it's coming down, of course, but no, it cannot be attributed 100% to central banks, because most likely the inflation would have come down anyway through the natural economic cycle, especially after a shock like the pandemic and some, the war and everything. So there are several things that are contributing to the slowdown in inflation and that are contributing to the strong consumers. So I do believe in soft landing.
The consumer is strong, although I think that we all have seen, especially recently, quite a few job losses, right? And that seems to continue to happen. I know that in some ways or some theories is good for inflation, but I also think that greatly impacts the consumer.
Yes, but remember that in 2020 and 2021, these same companies that are firing people today, they hired so many people that they still have an employee base much higher than
some froth in that market.
Yes, exactly. So it's part of the cycle.
I see you thinking over there.
At the risk of disagreeing with our moderator, there is probably nothing I disagree with more in the world than the Phillips curve model that would put a tension between employment and inflation. I agree 100% that inflation was going to come down regardless of the Fed tightening, for the very reason that I don't believe the Fed's easy, and I would say recklessly easy monetary policy was the primary cause of the inflation we experienced in 22 into 23. Here's a very simple explanation. They shut the entire world down, and then they reopened it. And when they reopened it, everybody wanted to have their lives back and do things and buy things and consume things like human beings. But the production of those goods and services was not able to turn back on like a light switch. So our habits for consumption can come back on instantly. The ability to produce could not. Combine that with labor shortages and other factors, and you had a big inflation spike. As supply chains normalized, inflation came back down. The correlation between supply chain normalizations and disinflation is almost 100% in the last 2 years. So I think that as to whether or not the Fed nailed a soft landing, I would say that I think we're headed to a soft landing, but I wouldn't give the credit for that to the Fed, because I think an overly interventionist central bank is playing with fire. And sometimes when you play with fire, you don't get burned, but I don't think that they get credit for that. They're exacerbating boom-bust cycles. That's my critique. But in this particular case, I 100% agree. And then the unemployment report this morning was just utterly stunning how strong it is. So you just cannot talk about a recession with corporate profits going higher, with unemployment in a 3-handle, with wages growing 3-4% per year. A recession is when wages, jobs, and profits decline. And when wages, jobs, and profits increase, we didn't have a recession. It appears they may skirt one, so therefore soft landing. But I really think that a lot of the luck, if I can use that word, would just simply be the maturity wall of so much of the borrowing. That there is right now you had mortgage rates go from 2 to 7, and it didn't affect anybody unless they were looking to buy a home, which everyone stopped doing. Because the average rate that people are actually paying in the society is 3.1%. Similarly, although there was a lot of floating rate debt in the syndicated bank loan world, such a massive amount in the bond market, corporate borrowing, the maturity walls in late 24, 25, the Fed was always aware of that. So they just had a free ride of being able to tighten rates over these last couple of years. They took advantage of that, and now we face normalization going back to a more normalized economy.
Yeah, I think I agree mostly with what has been said, and maybe to offer something that is a bit complementary, maybe the view from another geography, the economy is surprisingly resilient, of course. How do you see that from Panama, from Mexico? I commute 3 times in the month to Mexico, or from Central America, which is a microcosm. It's a very small region that certainly follows probably another dynamics. And in the big context of a big rotation of supply chains, maybe to the western side of the world, that has been very beneficial for many of the economies. You do see that regardless of whether the economy is going to continue to grow at a certain pace, or whether it is going to continue, or whether it goes to a milder recession, the optimism, the opportunities, that monies, the availability of credit to do things in the region is and continues. I think that will continue to be the case in 2024. Is going to be there. It's going to be available, and people, companies are eager to do business, are eager to look for opportunities. So I guess regardless of what might happen with the actual figure in the economy, I think the mood from the Central America, North and South America region is quite positive. Many of the economies have gone through different economic cycles, many of which have only upside, right? And small changes might mean a very significant development for those economies. So I would generally say it's a positive view from the South.
I think, when you think about Latin America, there's a lot of light at the end of the tunnel for all of us, right? If we're all coming through COVID, we're all coming through all of that. I think people are super excited about Argentina, right? Jump up 20%. We mentioned the IMF kind of gave some good feelings in that direction. BlackRock, Larry Fink said he's going to visit. Can you kind of just talk about your feelings on Argentina? Is that something that you're, excited about? I think I'll kick it to Luis. Are people looking to invest there? I know that they have a lot of infrastructure needs. Are your clients interested, excited about that at all?
Absolutely. Fantastic talent, great fundamentals. A 20-year-old, 25-year-old history, which is complicated for many historical macroeconomic reasons. But yeah, you do see a lot of traction in looking at opportunities in Argentina in many industries, right? In real estate, hospitality, lithium, you name it. I think that the context of today might be favorable for Argentina to grasp an opportunity that is there for them. There is certainly a lot of momentum, and we do see clients being interested in investing in the region. As a banker, we are approached by companies that are looking at opportunities, that are looking for some type of financing, and we do explore opportunities such as that. Certainly in the last few months, the momentum around Argentina as a name, about potential changes, is there, as compared to a year ago or 18 months ago. And I certainly think that that in itself is a positive development.
What changes that positive to a negative? Headwinds. Is there anything that you're concerned about? I think Argentina, but also just all of Latin America, right? I think that the outlook is positive, right? With light at the end of the tunnel. What are the headwinds or possible hurdles?
Well, there's a lot of externalities, right? I guess one of the biggest uncertainties around 2024 is geopolitical risk in general terms, and what happens elsewhere, whether it is China, whether there's a conflict in Europe or in the Middle East. It's always something that is going to have an impact in what's going on. Probably that impact might be a positive one, right? Because we're simply closer. There's a ton of resources. There's everything to be done. No infrastructure is not there. So opportunities will arise for the region. I don't know whether a big headwind might be democracy in terms of the context of 2024, and all the elections that are in the pipeline. Mexico, Panama, Dominican Republic, or Uruguay, you name it. There's a lot going on over there, and some of them, I guess most of the elections have a clear candidate as a winner. No, I guess that probably headwinds will come from something that is not anticipated by the market. So a surprise election somewhere, which I think is an unlikely scenario. I think is mostly anticipated how democracy is going to go in the region. I guess headwinds might come from there, or from a change, again, an externality, a change in policy by the end of the year in the US, that might look elsewhere rather than Latin America. It is clear that for Latin America, one of the major drivers of development is the US, and any investment that might come from the US, notably from this side.
David, do you have anything to add to that? I see the wheels turning.
Well, yeah, I think that when you talk about the externalities and he's focusing on some of the countries in Latin America with elections, I would just point out globally that 40% of the GDP of the world is electing a new head of state this year. That's very rare. So to have, obviously, in the context of the United States having a presidential election, and some of the significant countries from Latin America to Asia and into Europe, there is that potential for political externalities to be somewhat disruptive. I wouldn't refer to it as a headwind necessarily, but it's an unknown, and that could very well be a factor in enhancing market volatility.
In terms of Argentina, I agree with him that it is a land of opportunity, but I also agree 100% with Ricardo that it's going to get worse before it gets better. So personally, I wait until I need to see to believe. So, and I think that it's going to be a very, very difficult transition. I hope Milei really can execute everything that he said. I do believe that there are plenty of opportunities in Latin America. Mexico, for example, the nearshoring, the opportunity is endless, I think, for Mexico. We work a lot with Mexican clients. And the capacity utilization there, the infrastructure, the manufacturing capacity over there is over 90%. And there are regions that are close to 100%. So it really, really needs a lot of investments. And it really needs to work internally on security issues. Yeah. So that's a common for Latin America. It's a land of opportunity, but there is a lot of work to do internally.
So I think, turning the focus back to Miami, we're in Little Havana. I actually live in Little Havana. Miami is, I think, one of, if not the few places that has really bounced back after the pandemic, right? Our economy is extremely strong. Your clients, and I think, something that we're all talking about in this conversation is very focused on Latin America, but I really think that Latin America will always be a focus of Miami, but Miami has really turned into a global epicenter for business, finance, and everything the like. As you talk to your clients and you have those deep relationships, kind of how are they feeling about Miami? How has maybe your perception of Miami and its future changed? And kind of what do you see in the future, or what are you excited to see happen in Miami maybe most?
Okay. Since the pandemic, I would say everybody and their mother, they want to have a place in Miami, in Latin America. So what happens, everybody, a residential place and a place to work. Mm-hmm. What happens is that Miami got very expensive. So now my husband is a realtor, and he has many clients from Latin America that are looking to open up manufacturing centers here in Florida, but they're not looking at Miami.
There's no space. You can't build into the Everglades.
Exactly. They're looking to the north, Naples, Tampa, Orlando, etc. So I think Miami is a favorite place for Latin America, but for investments, people are looking upwards.
Interesting.
Yeah, it's tough to ask a New Yorker and Californian. I live bi-coastally, my take on the Miami economy, but I will say this, 7% of our business is in the state of Florida. And we have no office in the state of Florida right now. And I've been working for over a year because we would open tomorrow in either Miami, Fort Lauderdale, Palm Beach, Naples. I don't care what city we go to per se. I care where the advisory talent is. And we would love to take incumbent private wealth manager and triple their business within a year, because we think we have the infrastructure and the business development. We don't need advisors to go find new clients. We have more clients we know what to do with. We need talent on the ground. And it's fascinating that when I go open up a new office in so many other cities, I have 100 inbounds who want to come join our firm. And in Miami and other South Florida cities, I haven't, because I think everyone's doing well on their own. You know, our pitch is less appealing, apparently, when people feel like they're already in a really good situation. So yes, it's about 7.5% of our business in the state of Florida, which is really quite unique when we have no presence in Florida. But it speaks to both, obviously, the migration into Florida from other states such as New York, but also just the incredible on-the-ground economic growth and vitality that's existed here. And I think the performance of some of the policymakers has been a model for the nation.
Yeah, Miami is central to do business in Latin America. Many of the most interesting meetings that I have on a yearly basis happen in this city. Many of the transactions that will take place from the debt or the equity standpoint will originate from a dialogue here or there, and will have a Miami component. So Miami has only gained momentum since I started working in the 2000s to now. It has only become more important to Latin America in general terms. You used to cover, I've always covered Latin America as a region. You used to cover Latin America from New York, from Mexico City, from other places. I think Miami is a key place to cover Latin America dialogues, wealth management for sure, which is an industry that has been here forever and will continue to be, but also other type of investments. I only see that the role of Miami will increase in the near future in Latin America, and that is going to continue to be central. Even regional investors such as us, based out of Panama right now, we know that part of what we have to do in terms of engaging clients and even our own proprietary investment has to be performed out of Miami, and with Miami as a center, as a place in which you talk to the US, but also other Latin American countries, and you do business with. I think Miami's goal is probably to be the financial center for Latin America.
Yeah, we definitely talk a lot about that in my office. I think that we see financial services only continuing to really expand here, right? The trading floor going in Wynwood, the Citadel being here. It seems like the future for financial services in Miami is extremely bright, and probably, doesn't slow down for quite a while. And we're extremely excited about that. I think that the things that maybe concern us, we're seeing people move here, but they're taking smaller office space, which I think is a smart business decision, right? Instead of getting a place and getting 20,000 square feet, they're looking at more 5, 10, kind of putting their foot in the market. But I think that also makes us think about commercial real estate, right? A lot of headwinds across America. I think that Miami is a bit more secure because people wanting to move here. Also, too, we don't have the insurmountable amount of space as some places like Texas or other places. But in the commercial space, with the issues that are in China, how are you guys feeling about kind of commercial real estate at the moment? Ladies first.
I don't deal much with, we don't invest in commercial real estate. Clearly, it's been a very hard spot since the pandemic. And
was that always the case? You guys never invested in commercial real estate? Okay.
No. As I said, we do like really simple financial investments in bonds and stocks. And so I do believe that we had a piece of news yesterday, I think it was the New York Community Bank that reported really bad report because of the exposure to commercial real estate. So I think we're going to see more of that in the coming years, probably. And the most vulnerable would be the banks that are mostly exposed to that area.
Does that provide an opportunity for the private markets, right? I think with rates being up, that's what's kind of led some of the folks to looking into that. What do you think about that, Luis?
No, absolutely. I guess commercial real estate, industrial real estate depends on where. No, Mexico clearly, we've established that probably Mexico is going to be the place to be in 2024. No, then it's going to be driven by all the nearshoring opportunities, which I agree are endless. Commercial real estate for sure. In other places in Central America, probably less so. There may be some overhang, especially places like Panama. There may be some overhang of commercial real estate, but I guess it depends where. Most of our private banking clients will have for sure a component of commercial real estate on their portfolio, so it will continue to be a part of their asset allocation, and they will ask for projects and to have exposure to those. As a bank, from the financing side, we are constantly approached for projects similar to that in Central America. I do see that there is an opportunity. I guess it depends where to expect a high return.
And so where do you expect those high returns, right? As Latin America grows, it gives that opportunity for the development, right? What places in Latin America do you see that opportunity?
I mean, I would say for sure Mexico is going to be the place to be again in 2024, depending on the industry in which you want to be. There might be opportunities in Central America. I would see something related to green energy and to education as something interesting in the region. The group for which I work was founded in 1925 in Venezuela, so I tend to look at the world from that angle. Venezuela, it's a very complicated place, but in the 1920s was one of the wealthiest countries in the world. And 25 years ago, it continued to be somewhere interesting to do business. Small changes, and small pockets of capital might originate opportunities in otherwise countries for which you require a larger risk aversion. So places like Venezuela will originate opportunities, especially if geopolitical tensions continue to be, and other places with resources in the south will offer the availability of resources and human capital for private investors.
David?
Yeah, I just want to speak to the general question about commercial real estate, that I think it is helpful for investors and economically minded people to not really believe that there is such a thing as a monolithic asset class called commercial real estate. That multifamily apartment, industrial, logistics, warehousing, fulfillment centers, data centers, self-storage, hospitality. I own 6 different hotels that are performing very differently than multifamily apartments are. And I think that not only do you have unique product categories within commercial real estate, but then totally different geographies as well. And so they are universally impacted by the discount rate. I think to the extent that monetary policy impacts how you value commercial real estate, that is perhaps more monolithic, but that's true of all risk assets. Ultimately, Miami is a great example where you do have a very high-functioning office environment, and the media narrative about office, I think, is largely flawed. First of all, the ability to build a lot of new product, let alone Class A product, in some wonderful American cities is very limited. But if anybody just turns on TV, they're going to assume New York City office market's falling apart. I'm there every day. Go try to get lunch or dinner in Midtown without a reservation. It's not going to happen. It's packed. And I believe that last year, more leases over $100 a foot in office space were signed in New York City than in history. The high quality buildings are paying astronomical prices and filling up. We signed leases to move later in the year to brand new space on 6th Avenue, doubling our space and paying a big premium. The largest, Paul Weiss, massive law firm, just took the largest office lease in New York City that had been done in about 10 years as far as law firms. But Google, Facebook, Amazon all added huge new space. So it really comes down to the quality of the product, and where you have B or C level product, everybody is aware of the challenges there. But one thing I've learned over the years, particularly out of the GFC, with the retail space, is to never underestimate the ability of entrepreneurs, creative-minded people, especially talent in private markets, to basically rework assets to something more economically viable. Conversions from office into housing, office into hotel or student housing, retail that was really left for dead that got converted into something more lifestyle oriented. A lot of wealth can be created out of that process. So creative destruction can be a really wonderful thing for an economy.
I appreciate that. I think that was really well said and very poignant. So we've got 5 minutes left. There are all of these elections. If you were, and this isn't political, president for a day, looking at the soft landing, hopefully in America, what would you do financially? What would be your kind of charge? If you're president for a day in the US, what's your charge?
That's a tough question.
That's a tough question.
That's not a 5-minute question. I leave it to you first. I have to think.
What's funny about the context of the question is it depends if, when you say president for a day, that means I'm still working with Congress and have to go pass legislation and so forth. So really it isn't about what the president could do. Now, if it's king for a day or dictator for a day, that's a different.
That's a little bit of easier question.
Easier story. I don't really believe in a dictator for a day, but what I do believe in is that deregulation at the federal level in the United States of America is a very necessary thing. We're overly regulated. The president doesn't have the ability to make the central bank less interventionist, but I would like to see our national economic pulse less connected to monetary policy. I think that we have overly intervened on the monetary front, and we need to wean the patient off of the medicine that the central bank is constantly giving it. I don't think the president can do that, let alone in one day. But ultimately, and you see this in Argentina, my favorite thing about what I'm seeing is not necessarily a particular policy yet or a particular step. It's the bully pulpit. It's just the rhetoric to go to Davos and give a masterful speech like that, advocating for free enterprise, advocating for the triumph of the human spirit, advocating for deregulation. This is the need of the hour in various Latin American countries, European countries, but yes, here in the United States as well. So that's what I do for President of the Day before they threw me out of office.
Very complex question, and I don't think I'm the right person to think of what the president of the U.S. should do. No, but probably from my point of view, which is that from Latin America, Central America, what I wish could happen if I made that decision is to see more economic integration with the region. I would love to see the U.S. even more present in Latin America, investing in projects and getting involved in the economies. I think the opportunity is huge for somebody to capture it, and I think the logical business partner for all those Latin American countries is mostly the U.S. So if I choose what I wish to see there is more economic integration across the board.
Okay, I'm last.
Yeah, did those answers give you any insights? Or?
Yeah, well, the U.S. is considered like the leader in the world, right? So we need to stand by that view. We need to. If I were a president for one day, I would make sure that everything we do in the White House and in Washington is pro-business and pro-progress, disregarding political views or whatever. I know it's difficult, but part of that is deregulation, part of that is a good tax system, and part of that is also our position in the world as leaders. So maybe I would make a greater effort to get along with everyone and mediate for the end of wars.
Awesome. I can support that. I thank you guys for this conversation. I thank you for being here. And we're really excited about the future of Miami, the future of Latin America, and the future of financial services in Miami. So thank you guys all, and I look forward to the next conversation.
Thank you.